Hello guys, Hycroft mining has been trending in popularity recently and many people are wondering if they should be buying more, selling what they have, or simply standing on the side and wait for a better timing. And as the market is still very volatile in the moment, we should always be mindful about which stock to pick and what would be the exposure and the mining of our position. Over the past few days, the price auction of HYMC has brought the stock to $2.26 before stabilizing around $2. The short-term price trend of Hycroft mining has been bullish because recently the market showed a lot of interest to the potential for the stock that reached new height, and that interest has managed to stay and to hold its ground against the possible mouse sell-offs from existing shareholder before the takeoff. I think that the stock is going to have even greater surges in the future as the volume of HYMC remain strong and the stock seems to be regrouping for more momentum in the weeks to come. When we look at the long term price trend of Hycroft mining, it has been bullish as well. The stock has been making new highs left and right, and there is no reason currently to believe that it should not continue this momentum as we go forward in a general environment with significant selling pressure. I think that HYMC he can bring some much more needed change of ambience and momentum in our portfolio. Now let's take a look at the technicals of the stock. The trading volume of aircraft mining has recently been 16 million shares versus an average volume of 89 shares over the previous 2 week period. Its price fluctuated between 28 cents and $4.37. The market cap of Hycroft mining is currently at $429 million compared to an enterprise value of $196 million. The difference between a market cap and the enterprise value is the premium or discount the financial market is willing to allocate to the company based on its current fundamentals, leverage, and assets composition. The enterprise's value is the combined value of the company assets minus debt. If the company has a line of debt or a negative image among the market participants, the assets value may be impaired. With that being said, at the end of the day, it remains an estimation of the market every time it publishes its financial statements, so it's less reactive than the market cap and often more lenient for many other companies. One key element to note regarding the enterprise value is that for many growth type companies, one of the most significant assets they own is the goodwill, is an expectation of the market that a company can generate more profit or grow faster because it might have a better management team, a stronger brand recognition, and a bigger online following. It is what makes the company unique compared to its competitors. In other words, goodwill is not a tangible assets that company may use. It is often, however, the reason why some companies are perceived to be trading at a discount because the market count is lower than the enterprise value, and the enterprise value is less reactive than the market cap. In volatile situation, if the company goes the liquidation, the good will be gone and the bondholder and the shareholders will be left sharing amongst each other whatever that is not, which is far less compared to the number on the balance sheet when we compare to the when we compare the current price to its historical price fluctuation, the stock is 81% higher than the 1 month low, 608% higher than the 12-week low, and 608% higher than the 52-week low on the option market, which often gives us a hint about the market sentiment on where the stock price is likely going to go next. The implied volatility is 81% versus a historical volatility of 608%. The put call volume ratio is currently at 0.33. It is normal for many stocks to have a higher production volume than what they truly deserve, as many institutional investors and systematically hedge their loan position by buying put option. The most recent volume of option traded has been 20,000 contracts a day compared to 30-day average of 43. In terms of open interest, the most recent volume of open interest has spanned around 3,03,000 contract versus the 30-day average of 1,92,000 contracts. In terms of its shareholder structure, an institutional shareholder owns about 18% of current float. The biggest shareholders include Nomura, Whitebox, and Vanguard. It's relevant to understand the shareholder composition of a company. As this help us to determine if the stock is a long-term investment or should be simply viewed as a trade opportunity. If the stock is mainly held by retail traders, this is a sign that the stock lots the depth justified long-term trust from shareholder. Typically, the consensus is that there should be at least 25 to 30% of institutional participation for the stock to be perceived as a sound investment and not just a short-term trade. There is obviously a lot of expectations to this, as many great companies are also mostly held by retail investor, but that tends to be the expectation and not the rule. Let's also take a look at the short interest present in this stock, which is the amount of position aiming to profit if the share price falls lower. Sometime when there are significant short interest in the total volume, so there is a sign that something more organized may be going on, like what has been going on with a Tyrian GameStop, HYMC, and so on. I would recommend a commit between 1 to 3% of your portfolio in the HYMC, and I would also recommend to split the allocation in the batches of 10 to 20% at a time, so that you may be purchase more afterwards if it portray us. Now, given the current market environment, I believe that the equity market is in a vast phase of correction. We are now seeing a new phenomenon with a short squeeze involving a group of retail traders propping the stock price up, forcing short sellers to recover their position. Sometimes the attempt will not succeed, but sometimes they end up in a very spectacular success. Something else to consider is that treat tech stock with care. The start asks the question, when the price of a security skyrockets without real fundamentals, it doesn't mean that you should not be touching it with a 10-foot pole, but it does not mean that there should be a difference between the decision of long term holding and short term. Either way, a rule of thumb is that each position should be structured in a way so that their individual performance will never affect the portfolio stability. Thank you for watching my video.